Welcome, and you're watching a budget special coverage on NDTV Profit. You might miss Alex because it's the editor's cut, but I'm fronting it, and with me and 4 of my colleagues, we are going to try and tell you what the editor's take on this budget is. This is the top editorial team of NDTV Profit. With me, to my left, Sajit Mangat, to my right, Tamanna, Samina, and Muralidhar Swaminathan. Okay, guys, let's try and set the basics of what stood out in this budget. Murli, you've had the most time off air, so let me start off with you.
Okay.
What did you make? What are the key takeaway for you?
Okay, so the most important takeaway is not about tax, it's not about capital gains tax, it's about the 5-year roadmap. Very clearly, that is what the agenda is. We should not look at it from what's going to happen now to your capital gains tax or real estate capital gains or income tax. Of course, there are benefits, but look at what is set for the next 5 years. That's what we need to look at, and that is where I think maybe the market is recognizing that. So you would be able to elaborate in the course of the conversation. 3 things stood out for me. One, very clearly, the agenda to create jobs. That's the top priority, not just now, over the next few years. Once you focus on creating jobs, your consumption will continue to grow. So in any case, we are going to be a consumption-led growth. And the message here is very clear. The Capex has not been increased from 11.1 lakh crore. That's not been increased. All the focus is on jobs. The other focus is on welfare schemes. As far as jobs are concerned, there is a shift in strategy. In the past, you will say that I'll build a road, I'll create jobs. Now it's different. You are giving incentives to employers. Perhaps I think in recent years, you, Sajit, might allude to this. We have never heard of incentives to employers for job creation. So that's a big shift. And then the welfare schemes that are being evolved are based on asset generation model. So these 2 things will help sustain the growth. For us, sustaining growth is going to be important. All the other things will follow later.
Okay. Now, we'll make this freewheeling, so everybody can come in whenever they want. But, okay, Samina, to you, what stood out for you?
I think this is the very first time, Neeraj, the economic survey was rightfully reflected in the budget. So it wasn't 2 different tales in so many words. Fiscal consolidation, the fact that they're going to be disciplined about this and do better than what they'd initially promised is a huge positive. Apart from that, I think the fact that they've kept the Capex number unchanged, it's a direct message to the private sector saying, it's now your time to do your job. We've done what we had to. It's now time that you play ball. And I think that stands out. So while employment is very, very important, the onus will be back on the private sector to do what's needed most, which is Capex, hire more people, build the manufacturing. And I think one last one is the commitment to simplify the tax code. Again, a big standout, because if you've got to draw an FDI, we have to have a simple tax code. While the rates could have been tinkered with, simplification is a key positive.
Yeah, and I think in some sense, one good thing was that we know that the top 30 or the top 100 or 200 firms are doing the Capex, which they have, green energy, etc. The bottom rung, the MSMEs are not. And in some sense, this ability to tell smaller companies that we are giving you incentives for employment, so on and so forth. Let's see if that brings about some bit of capacity build-up or Capex at that end, because that has thus far clearly been missing. Tamanna, your take.
That's exactly the point, right? The capacity building or the job growth is going to come in from the MSMEs and the mid-cap kind of companies, and not from the top companies here. Now the question is that whether they have that incentive to pick up that Capex and go ahead. Do they have the capital to do that? That's the thing which we need to see now.
Also, just to add to that list, even Gift City, we didn't talk about this very much, but Gift City has been very significant to the government in order to bring all that foreign money in and localize everything. So creating jobs, pushing for growth, that could be an impetus for Gift City to go out there and hire people and expand that offering that is there.
Yeah, and there are points around the foreign companies as well, and we'll get to that. But Tamanna, yeah, the tax changes, but your initial take, Tamanna.
Okay, so I would say, and a bit of taking this opportunity to crow a bit about NDTV Profit's coverage, but if you had watched us in the run-up to the budget, a lot of what our experts said, a lot of what we said has come on those lines. And why am I saying that? So Manish Sabarwal, for example, when we talk about employment, and that's one of the foremost voices, comes and says that if you want to really create jobs, don't focus on those looking for jobs, focus on those giving the jobs. And if you look at what they've done in this budget, I will incentivize you if you hire more people. I will give you a subsidy on their PF.
contribution.
Okay, you have to hire interns for 12 months, pay 10% out of your CSR. I'm making it easier for you to give jobs. The other thing that we said, that any tax relief will come on the new tax regime. This Section 80C dreams we should forget about, and that's exactly what has happened. We also said that there will not be populist measures towards the rural economy as is being expected, and look at what they've talked about. They've talked about incentivizing farmers to have climate resistant crops, more R&D, etc. No huge outlays like were expected. I think the joker in the pack really, and which was something that we'd also said, was on capital gains tax. The long-term capital gains tax is going to pinch. The exact impact of it will be known in the next couple of days, whether it's on fixed assets like real estate, gold. The markets, in my view, will be fine. They will get a bit of a hit initially, but they'll learn to live with it because people have made money. So if you have to pay a little more in terms of tax, it's okay. It's something that will be swallowed and tolerated.
On the capital gains front, my view is that the promoters who are coming out with IPOs are not going to put in their shares in the IPOs now. They will wait for the stock to list before they exit the stock. Because the fact is that the indexation, the grandfathering which was available for unlisted stocks have been removed. So basically what happened in 2018 was that there was a grandfathering on the price at that point in time, and many of the unlisted companies were using that as one of the clause for to get a lower capital gains. Now that has been removed, which basically means that now they are taxed at full rate, which 20% for long term and 30% for long.
Private equity, which has been aggressively selling out, will now stay in.
You'll stay in till the.
So that's actually a good thing, right? Because the liquidity
but then you have a lot of block
equity
deals
stays.
and other stuff coming in because they will exit after
But Sajid,
listing.
this was for 2018, so private equity which has come in post 2018 doesn't have this benefit effectively.
Anyway,
You're talking about promoters who own the equity in the company before 2018, not incentivized to
So
do.
maybe venture capitalists, right? Not even
2000
that much
post-
late-stage
There
private
are
equity.
hardly
Why, a lot of companies now get listed after 3 years or 4 years of operations. So all of those don't, but the
But then-
Neeraj,
but
it's
then,
the pre-IPO phase anyway is not counted here.
Yes.
Private equity still comes in 3 to 4 years anyway out before a listing, right?
Exactly.
Also, just to quantify that capital gains increase, and Sunil Singhania said this, and I think there's merit in it. He said, first, if you were gunning for 15% returns on your portfolio, by increasing your capital gains from 10 to 12.5, the impact of that is 35 basis points on your returns. So now, instead of saying, I'll stay invested till I make 15%, my goalpost is 15.35%. So, of course, that's simplifying it too
But
much.
on short term also there's a bump up.
Then that's the trader's money,
short-term
any
is
which
more.
ways. It's not sticky.
Absolutely.
anyway.
I'll tell you my problem. Sorry, just one point here. I'll tell you the problem with this taxation. One, very simplistically, 12.5 is not a rounded number. I think in the first year of the budget, they have not come out and said, okay, we are doing it X% and Y%. Now this is the tax for the next 5 years. It is open. As of now, no comment about whether this is the end of it.
Yes,
I think the market may, in its wisdom, believe that this is a start. We do not know where it will end. I mean, for all the talk of tax and tariff predictability and continuity, this is the missing piece. I hope at some point of time in an interview, they clarify about whether this is it for the next 5 years or could there be more? Because you don't want uncertainty. Even if they've done this, it would have been great if they had come out and said, it's 12.5 and 20, and for the next 4 years, we don't foresee any increase. At least there is some predictability. In this case, that predictability about taxation regime on capital gains is missing. I wish that comes in.
Maybe that's the fine print.
Neeraj, to be fair, when the last time we tinkered on capital gains, we never said it's going to be there for 5 years.
Yeah.
So it was
they're
there.
so stable.
They will never say that.
No
So it's
government has
No
to
government will do that.
maxim
No
that, once
government
you
has
do
to
that,
promise,
you
I
keep
won't
it for a
tax you
longer
more.
period of time to assess how the capital gains
The
is
reason why
working.
this time it's important, sorry, I'll just spend 30 seconds more here. The reason why this is important because now the market in its wisdom might want to believe that they want parity between all asset classes.
Yeah, exactly.
And equity taxation is still lower than some of the others. So will the market now fear that a higher tax is around the corner, could it impact global investments? That's the only.
No, I would like to answer this question. I would like to answer this question.
Yes, before that, Melissa, while that could be a fear, let's not forget that the markets were down 400 points when these announcements were coming through. But we've gone home with a 30-point cut on the index, even though the breadth of the market was weak. We've taken it in our stride, at least for today.
No, so the 12.5%, Samina, is that it's part of the rationalization, because you were taxing capital gains on the basis of different asset classes, something for property, something for gold, something else for debt. That was done last year or the year before. They rationalized that one. So this is part of the rationalization. That 12.5 is your bench. Now from there, like it's 12.5 for everything. Indexation is gone. So they have to rationalize that part. And somewhere I think STT will also be kind of rationalized.
My question is, on F&O, there was a huge scare. What has come is this STT tweak. My question is this just the beginning? Are they done with are they done with their attempts to curb the large volumes coming into quote-unquote speculative trade?
No.
The consensus is no on the table?
Consensus seems to be a no.
Consensus, the markets may be cheering STT today. The reason being that the finance minister hasn't converted gains from F&O as a speculative income, and so it will be charged to your
so not
tax
as bad
lab.
as you would expect.
Not as bad as expected.
But that is still at the highest
No,
tax level.
if you end up paying 1,000 rupees more,
Why speculative income is taxed at the highest tax bracket anyway?
It's not been categorized, right?
It's
Trading from F&O is not being
No, it's
categorized.
business income.
It's business income.
Categorized as business
Simple, but
income, which is your highest
but that's the
tax.
highest tax slab anyway.
Yeah, but
tax.
it's one of the things which market was expecting is emphatic increase in that taxation rate.
How can
or
they do it?
categorization which was there. But
Okay.
point
Anyway,
is that if you look at the breakup of the turnover of STT, it's the proprietary traders who are the biggest traders in this market. And the impact for them is hardly any in that sense. And
So no
that's
impact there. Okay,
So because
good.
retail is not going to go away because just STT has gone up. There is hardly any.
Fair call. Okay, now before I give my take, Sajid, your quick take.
My entire thing was that there should have been an increase in Capex from 11.1 lakh odd crores, because there was a fiscal room available for them to increase it. Unfortunately,
have taken that.
The cost of the glide
Fiscal road
path?
was used to convince and take care of Andhra Pradesh and Bihar and Orissa.
Can the
Andhra
economy?
Pradesh, Bihar and Orissa is not been funded from the budget. It's multilateral loans which they are going to do it. So it's not the budget which is
15,000
funding.
crores.
So where is that
15,000
That's a small number. That's a small number.
15,000 crores is going to Andhra Pradesh from the budget.
But that's a small
Bihar
number.
flood relief, all the
everything is-
But that is to
all the-
multilateral
No,
agencies.
but all the expressway projects will
All
come
are
from
part
the
of the
budget.
NHAI
Yeah.
budget
Fiscal
anyway.
glide path
And rebuild
has
the
been
bridges
reduced.
which crashed.
That's the tax buoyancy which is helping you, right? To 4.
but Sajid,
Maybe
It's
it
a
comes
simple-
at the offset
I'll
of
give you an
divestment
example.
receipts not coming in.
STT collections were expected at 36,000 crores for this FY25.
Where is the money, Sajid?
The money is here, right, in STT.
No, but that's not the point.
we
Sajid,
have hit
sorry, just the
30,000
Sajid,
impact.
just the counter to your point though. There are 8 months left in this fiscal. Don't look at the percentage, but the absolute number of capex announced in the interim budget was fairly high.
Yeah.
You couldn't do anything because of Achar Sanhita. How will the economy absorb so much of capital in 8 months? I don't think the Indian economy is primed to absorb so much.
and
of
private
capital.
sector is
And
private
private
to step
sector
in
needs
now.
to,
Private sector is
needs
already
to
doing
catch
it.
up.
It's not
At
happening to
some
that
point
extent.
so at some point of the private sector needs to do it, because how long can the government do? Anyways, it's debatable, but this is one point. What else is your top take?
The other thing was the tax buoyancy. I think they have taken a very conservative approach with respect to tax revenue collections, which is there. I believe that there is much more buoyancy there, and that could have been used for
It's
more.
good to be conservative.
It could be.
Maybe,
It could.
we've
It could be.
saved ourselves
You
one
can
too many
say that,
times.
but then you can use it somewhere else as well.
Maybe they will use it if the money comes in. Okay, fair call. Just very quickly, my take. I mean, one thing that stood out. I mean, I just like the fact that while the going is good, they have gone ahead and done a 4.9 number on the fiscal deficit, because one doesn't know if the economy slows down, whether they have enough ammo to move from a 5.1 to 4.5 in FY26 versus moving from 4.9 to 4.5. Because remember, when S&P changed its outlook, S&P mentioned that the state plus central should be 7. We know state is usually 3.5. So the central needs to move to 4%. So they need to show that glide path. They've done it 4.9 admirably now. Go to
2026.
4.5 presumably, and then cite 4%.
Let me
would
give
have
you
a more
let me give you
advantage.
the other side of that equation. If state plus center has to be 7, center is becoming more conservative because a lot of states will have to be spending ahead of two crucial elections, Maharashtra and Haryana, and state governments are with the same party. So, you have to give yourself some room. States will have to be spending all of your schemes to help farmers, subventions, a lot of that.
Yeah.
Ladla Beti, Ladla Beta, all of that is coming on the state government's books.
Yes.
And you have to make room for that. So maybe
And
that
two
big
major
picture.
reforms which we are missing is land and,
And
labor.
labor.
Yeah,
Labor
but I
is
think
yet
that
to
is
be
a tough
notified,
expected
but
first.
labor is yet to be, both the state subjects, but
Yeah.
they're linking the land reforms to the central grants, which is a very good thing because we saw that what happened to power sector, right? Means the discoms were not paying, were not getting the money, and distribution companies, the first right of money went to them. And so if you're going to link your capex cycle to land reforms and the labor reforms, there is a chance that in next 3 years you're going to achieve these things, and digitization of land and a better data pool of labor is going to be a big asset going forward.
Maybe off budget items, but who knows? Let's see. Anything else, guys?
I
that
want to
you have
ask Neeraj a question. Two-part questions. Why did the market fall initially, recover and close flat, except for some sectors? Part number one. Part number two, how will the markets behave tomorrow when you go back, read the fine print, understand each sectors? So will the action be very sector specific and stock specific tomorrow? What is your take?
I made 2 or 3 phone calls after I got off air. The sense that, and it's a limited sense that people in the markets have, but the sense that I got is that the capital gains uptick was disappointing and there is an uncertainty there. Do we see a bit of a reaction in the days to come and not just tomorrow? Very likely. Is it a certainty? No. A lot of people talking about how the quantum of cash that domestic mutual funds were sitting on, and it will be interesting to see the buying figure today, that may have brought it. I doubt that mutual funds would buy into the market just on a 1% or 1.5% downtick. So I think that side of the equation need not necessarily be true. Remember, we've been falling for Friday, Monday, Tuesday we fell, so it's 3 days of a fall. Some bit of short covering might also have happened.
Correct.
Be important to look at the cues today evening, both the institutional number that come in and the derivative action that has happened to try and figure out. But is it the end of the road? I think most people said they would want to wait and watch. They are not able to predict right now whether the markets will necessarily go down tomorrow or not.
Well, historically, I think the belief is it's back to business. That budget
Back to
euphoria
earnings,
or
basically.
disappointment
Back to
is
earnings.
only for the
Which are not
day.
I guess Bajaj Finance is not.
People are relieved the budget is over. You can get back to the nitty-gritties,
Right.
and it's because that's the theme right now. It's a graze from the ear, not a shot in the head. since we are in that stage, it's not a complete assassination of the FNO kind of euphoria. It's just a graze to the ear, and maybe that's something that will be digested. Markets will come up with their fists raised high to get that.
Cross fingers for that.
Trump reference.
But guys, we
if
have
any.
4 minutes or 5 minutes left. Anything else that stood out? Anybody? Very quickly. Let's make this quick now.
I have just one take on Nirmala Sitharaman, okay? Because when she came in as finance minister after the late Arun Jaitley, passed away, and this is just something I've seen chatter. She was initially underestimated. A lot of people on Twitter, love to take on her. Consistently performed on the 2 or 3 key things that finance ministers are judged on. Are you tightening your belt on fiscal glide path? Even during COVID, did not let things go out of whack. No free hand on giving away freebies, which will wreck the balance sheet. Been very, very conservative, clear-headed, no nonsense, and has not had to roll back too much, which in the history of Indian budgets is something that happens all the time. So a word here, even after these elections, it was being speculated, will Nirmala Sitharaman get the finance portfolio again? Will there be other contenders? She's been, I would say, the dark horse in this race who has emerged very, very strong with a solid track record.
And I don't think anybody will contend with also. The one time that she had to roll back, she did it very immediately without any kind of issues. So I think no contention out there on how well the FM has performed. Really, full marks to her.
Yeah,
Please.
no, I have a point to add. See, the overall budget philosophy, we came to know, our viewers, network viewers, NDTV network viewers came to know from the Prime Minister when he gave an interview to our Editor-in-Chief, Sanjay Pugalia, very clearly these 5 key priority areas. He said, this is what I'm going to focus, and the budget is focusing, apart from all the other changes that have happened, farmers, jobs, welfare schemes, uplifting poverty, MSMEs, where absolutely, and women, and state competitive federalism. So she is focused on all those 5 areas. Now, it's a question of implementing them over 5 years. So just to remind the viewers that the PM's interview to NDTV network highlighted all these things.
Yeah, and I think it's an important point. That's a 5-year piece. But anyways, yeah, we can go on with this. Samina, Sajid, any last points? Anything else?
I think from a personal taxation front, I think people would be happy that, okay,
Section 80C deserved a little bit more lease of life, but that's clearly not
maybe she wants you to go to the new tax regime.
And even on women, I must say, on women, there's a request to states to make it easier for women to buy properties. That's pretty much. It's a request
some
to
of the states already have a lower stamp duty.
So it's asking states to do it. So nothing really.
Yeah, buy properties but don't sell.
There's nothing really. Nothing really as of today. Nothing really today as for women.
Yeah, what was missing? I thought just one last point from mine. I think in the interim budget they had made this very interesting thing, and I missed it maybe, but they had made this very interesting provision or mention about 1 lakh crore for research, because R&D activities need to step up. I was hoping something would be mentioned around that.
They've retained it.
They've
retained it.
She
retained it, I think.
Yeah,
But I
just
think,
that's it.
tough for investors, good for jobs, good for employment, good for the young, and good for political priorities as well in some ways.
Didn't give
And
too
done
much.
very well.
Didn't give too
Didn't
much
give
to
away too
allies.
much.
Done
Didn't
very
give
well,
too
that's
much
the
to
point.
allies either, kept them all happy. They can go back to their constitutions and say that, see, Andhra Pradesh and Bihar got what they deserved, but hasn't given too
Even
much away.
Orissa got a lot.
Yeah.
And
I'm
not
talking
giving
in
away
terms of
too much.
allies, but of course, Northeast,
There's a new
Odisha.
state.
It was just high on headline value, right?
Yeah, but I mean, which is great. A budget shouldn't essentially be necessarily a market moving or economy moving event. It should be a statement of accounts, and I think in that sense, this has turned out very well, save for people who will look at taxes because there are a lot of changes there. But, well, that's it on this edition of the Editor's Cut. We hope you found it useful. Thanks so much for tuning in. You can mention in the topics comment segment what did you feel about this. And remember, stay tuned to NDTV Profit for more news and updates today evening, as well as tomorrow morning, a power pack lineup to take you through the finer points of what the union budget had to dish out for the economy and for the investing fraternity.